What if I told you there are assets so resilient they've survived wars, revolutions, and economic collapse, and still gained value? While most people chase trends, the wealthy quietly protect their empires with assets that never fail. They're not flashy, they're not talked about, but they've built dynasties. And the first one, it doesn't sit in a vault. It hangs on a wall. Let's find out. Asset number 1. The asset of prestige, art. Some investments live in spreadsheets. Others live in museums. Art is one of the few assets that transcends numbers, because its value isn't just financial, it's cultural. And the wealthiest people in history have understood this better than anyone. From the frescoes of ancient Rome to Basquiat's in Manhattan lofts, art has been quietly holding and growing wealth for centuries. It's not just about beauty. It's about legacy, scarcity, and emotional gravity. Unlike stocks, it doesn't move with quarterly earnings. Unlike real estate, it doesn't need maintenance or tenants. Art exists in a world where value is shaped by rarity, history, and human fascination. There's no price ceiling for a culturally significant painting. A single canvas can be worth more than a fleet of cars and still be considered underappreciated. What makes art a powerful asset is that it's unlinked. It doesn't care about inflation, interest rates, or political swings. It holds its own economy, one powered by collectors, institutions, and cultural value. When markets collapse, art often holds, and sometimes even climbs. Because in chaos, people chase certainty, and timeless pieces offer just that. Billionaires understand this. That's why they store works in ultra-secure free ports, climate-controlled, tax-free vaults where masterpieces quietly accumulate value, protected from risk, hidden from volatility. But this isn't just a billionaire's game anymore. Fractional art investing has changed the landscape. Through platforms like Masterworks, everyday investors can co-own multi-million-dollar paintings. You don't need millions, you just need awareness, and the data backs it up. Over the past 3 decades, blue-chip art has outperformed the S&P 500, particularly during market downturns, because it's not driven by speculation. It's driven by story, identity, and exclusivity. Art is also uniquely mobile. It crosses borders, avoids financial tracking, and in many cases is passed down through generations, not just as a family heirloom, but as a financial shield. You don't have to sell it to benefit. Just owning it diversifies your wealth in a way few assets can match. Because when a piece becomes iconic, it escapes its frame and enters history. And that's the difference. Most assets grow with the market. Art grows with meaning. It's not a stock, it's not a building, it's a statement. And in the hands of the right collector, it's wealth that lasts forever. It's beauty with a balance sheet. Asset number 2, the Earth's original equity, land. Some assets take time to understand. Land doesn't. It's the most elemental form of wealth and one of the oldest. Long before we had digital assets, equities, or banks, the person who controlled the land controlled everything. Kings, empires, dynasties. They weren't measured in cash. They were measured in territory. And in many ways, that hasn't changed. Land is the only asset that's truly finite. You can't manufacture more of it. You can't download it. And once it's taken, the supply shrinks for good. It exists as it always has. Fixed, physical, and essential. Unlike real estate, it doesn't need upkeep. Unlike stocks, it doesn't rely on management. Land simply exists, passively appreciating as demand catches up. And that's the genius of it. Every building, every business, every road starts with land. It's the canvas for all creation. And over time, it becomes more scarce, especially in regions experiencing population growth, infrastructure development, or industrial expansion. What's powerful is that much of today's most expensive land wasn't always expensive. Areas that were once farmland or wilderness are now home to skyscrapers and supermalls. Why? Because the world built around them. That's where the investor's edge lies, buying land in the path of progress, before it becomes obvious, before the price reflects its future potential. You don't need to develop land to profit from it. You can lease it to farmers, rent it to solar or telecom companies, or simply wait as the surrounding area grows in value. It also serves as a hedge. When inflation spikes and currency weakens, land tends to hold, or even increase, its purchasing power. It's a physical asset, immune to digital volatility and financial engineering. And it's one of the few assets that's easy to pass down. There's no app required, no passwords, no infrastructure, just title and soil. From a legacy perspective, it's powerful. Families across generations have preserved and grown wealth simply by holding on to land. Sometimes for decades without touching it once. Because land doesn't age. It doesn't go obsolete. It just waits. And that's the quiet brilliance of it. In a world obsessed with speed, land rewards patience. It proves that the oldest forms of wealth are still among the strongest, because no matter how far technology advances, the world still needs somewhere to stand. Asset number 3, the pulse of civilization, dominant stocks. If you want to predict the future, Don't look at the headlines. Look at the companies building it. Dominant stocks, the ones that drive civilization forward, aren't just businesses. They're the backbone of modern life. They build the platforms, tools, and systems that the global economy runs on. Companies like Apple, Microsoft, Google, and Amazon aren't just tech giants. They're utilities in disguise. They're as necessary to our daily lives now as electricity, roads, or clean water were to previous generations. The reason these companies are such powerful assets is simple permanence. They adapt faster than the world changes. They see disruption coming and either lead it, buy it, or neutralize it. During economic downturns, smaller companies often vanish, but dominant players, they consolidate. They absorb competitors. They buy distressed assets for pennies on the dollar. Recessions aren't existential threats. They're expansion opportunities. Look at history. Amazon started selling books. Now it's a logistics, retail, and cloud computing empire. Microsoft was a software company. Now it powers global business infrastructure. Google was a search engine. Now it dominates AI, advertising, and data. These companies don't just react to change, they architect it. And their investors have been rewarded handsomely. A $1,000 investment in Amazon in 1997 would be worth over $1 million today. Early Apple shareholders watch their investment multiply dozens of times over. It's not just about stock prices, it's about embedding into daily life so deeply that alternatives become unthinkable. That's the real moat. Network effects, trust, necessity. Yes, stock prices fluctuate. Dominant stocks experience corrections, but over decades the trend line is up, and dramatically so. Their ecosystems grow, their influence deepens. Investing in these companies isn't about chasing hype. It's about owning essential infrastructure, digital and otherwise. And it's not just about the past. With emerging industries like AI, renewable energy, quantum computing, and biotechnology on the horizon, today's dominant companies are positioning themselves to lead the next revolutions. Because dominance isn't static, it's dynamic. It's earned, again and again. The companies that recognize where the world is going and place themselves ahead of it aren't just survivors. They're multipliers. And for investors who have the patience to ride the cycles, the rewards can be generational. Owning dominant stocks is like owning pieces of civilization's operating system. And as long as humanity keeps innovating, the right companies and their shareholders will keep winning. Asset number 4, the anchor asset, precious metals. When everything else feels uncertain, precious metals don't flinch. Gold and silver have been humanity's most trusted forms of wealth for thousands of years. Long before banks, stocks, or digital currencies ever existed, they've survived the fall of empires, the collapse of financial systems, and the erosion of countless paper currencies. Why? Because they are simple, tangible, scarce. You can't print more gold, you can't replicate silver with an algorithm. Their supply is naturally limited, and that scarcity gives them one critical advantage: lasting universal value. When markets crash, when fiat currencies crumble, when geopolitical tensions rise, gold and silver typically rise with them. They are called safe haven assets for a reason. When trust in systems evaporates, metals endure. But their power isn't just emotional, it's strategic. Central banks across the globe, from the United States to China to Germany, continue stockpiling gold as a backbone of financial stability. Even the most powerful governments quietly acknowledge that when all else fails, physical assets are the ultimate fallback. Unlike real estate, precious metals require no maintenance. Unlike stocks, they don't depend on innovation or management. Gold doesn't need earnings reports. Silver doesn't need market buzz. They simply exist, outside the volatility of human institutions. Precious metals don't produce passive income, and they're not speculative plays. Instead, they store purchasing power across generations, one of the rare assets that survive centuries, not just cycles. In countries battling hyperinflation or economic collapse, gold often becomes more than an investment. It's a survival tool. Families pass down coins and jewelry not because they're ornamental, but because they're resilient. Trust in institutions can vanish overnight, but trust in gold never does. And it's not just about defense. During extended periods of inflation, gold has historically outperformed stocks, bonds, and cash, quietly protecting wealth when paper assets lose their bite. Silver, too, deserves attention. Beyond its role as the poor man's gold, silver's industrial demand is exploding, from solar panels to electric vehicles. Its dual role as a precious and industrial metal gives it unique upside potential in a world shifting toward green technology. Both metals offer something rare: sovereignty. They aren't tied to apps, banks, or bureaucracies. They're real, portable, and universally recognized. In a properly balanced portfolio, precious metals provide peace of mind. They don't chase yield. They preserve capital. Because in the grand sweep of history, civilizations rise, markets crash, currencies devalue, but precious metals remain. They are wealth's original insurance policy. And no matter how the world evolves, gold and silver will always have a seat at the table of real, enduring value. Asset number 5. The living asset, real estate. Some assets create wealth on paper. Real estate creates it in brick, steel, and land. Real estate isn't just an investment, it's a necessity. Shelter, commerce, logistics, every human society needs physical space. And that fundamental need makes real estate one of the most resilient and versatile assets in history. Unlike stocks, which can vanish overnight, or currencies that can inflate into oblivion, a piece of property remains. It's tangible, it's usable, it has inherent value, no matter what happens in the economy. And it doesn't just sit there. Real estate can pay you while you hold it. Rental income, appreciation, tax advantages, leverage opportunities. Property offers multiple ways to grow wealth at once. You can improve its value through renovations. You can refinance and pull out equity. You can rent it out for passive cash flow. Or you can simply hold and let market forces do their work. Historically, real estate has created more millionaires than any other asset class, not because it's fast, but because it's steady, scalable, and inflation-resistant. In times of inflation, property shines. As the cost of goods and services rises, so do property values and rents, helping owners maintain and even grow their purchasing power. Debt also works differently with real estate. Fixed-rate mortgages get cheaper to pay over time as inflation erodes the value of money. Smart investors use this dynamic to effectively borrow today's dollars and repay them with tomorrow's devalued dollars, quietly building wealth with leverage. And unlike paper assets, real estate offers control. You pick the property, you decide how to manage or improve it, you set the rental terms. Strategic decisions can massively boost returns in a way few other investments allow. From suburban homes to high-rise condos, multi-unit apartments to commercial spaces, real estate adapts to different goals, time horizons, and levels of risk. Accessibility is also evolving. REITs, crowdfunding platforms, syndications. Today, you don't need massive capital to get started. You can build exposure piece by piece, learning along the way. Because at its core, real estate isn't about luxury or speculation. It's about solving a timeless human need space. In a world increasingly driven by virtual realities, physical presence still matters. People need homes. Businesses need storefronts. Logistics needs warehouses. Real estate endures because it's rooted in something bigger than market cycles. It's rooted in life itself. And that's why property will always be wealth's most grounded and most essential asset. So now you know the 5 assets that never lose value, and why the world's wealthiest people rely on them decade after decade. But if you want to take the next step and make real estate work for you without owning physical property, there's something you'll want to see next. We've put together a detailed breakdown of the 6 best REITs to buy and hold forever. These real estate investment trusts let you earn passive income from real estate without the headaches of tenants, repairs, or massive upfront costs. If you're serious about long-term income and stability, that video is your next move. Click the link on screen or in the description to watch that now. If this video gave you a clearer vision of where to protect your wealth, do us a favor, hit that like button. It helps the channel reach more people building their future. Subscribe for more breakdowns just like this, and drop a comment below. Which of these 5 timeless assets would you bet on? Whether you're just starting or diversifying your empire, remember this. Smart investors don't chase trends. They own what endures. Stay sharp, stay focused, and stay wealthy.